how do you deal with trading losses?
Like one of the examples I can give is from my biggest loss. It was the first time trading made me actually cry.
I've also heard that fear of missing out can significantly impact trading decisions as well.
FOMO can be fear of missing out by missing the trade. It can also be fear of missing out by holding on to your trades for too long.
Welcome to the The Expert podcast, where we will be talking on recent markets and finance related topics. Now, today, I'll be asking you guys a few questions diving into the minds of traders. And now, this is actually from our viewers because they are keen to understand how traders' psychology is.
Because it's very important. Yeah,
It is.
of course.
And I don't think it's talked about enough as well.
Yeah.
Yeah, so first question, as traders, how do you deal with trading losses? Is there a mental preparation that you guys go through?
Cry.
Well,
Got you.
when I first started trading, I felt every high and every low of each trade. You know, if I win, I feel ecstatic. If I lose, I get depressed. You know, so but with time, you start balancing your emotions, and if you win a trade, if you're profitable, you don't get too excited, and if you lose, you don't get too sad. You have to try. It's not like autopilot. You have to put the effort and do that. And to get there, it's a long, very long journey. It's a very long and hard, but it's doable. And once you do it, you will thank yourself that you've gone through the journey.
Yeah.
Like one of the examples I can give is from my biggest loss, okay, that I took. And every trader has his own story
Yeah.
of their biggest loss, whatever it is, the amount. It's all relative. So when I experienced that loss, it was the first time trading made me actually cry, okay, because it was in one day. It was very quick, but it's not like I lost and I started crying. No,
Yeah.
it doesn't happen like that.
Yeah.
You have to go through the stages. You know, the stages of grief.
Grief, yeah.
First denial, then anger, and then you get sad, and then you accept and move on, right?
Yeah.
Something like that. So you have to go through those stages, and sadly enough, not every person does that, because if you go through them, you feel the pain, and you actually express yourself. In my case, I cried. So maybe someone else doesn't cry.
Yeah.
Each person is built differently. But if you actually do these steps, you go through them, you accept them, and then you will learn from it. Because if you don't, you stay in the denial. You will repeat the mistake, the same mistake. That's the problem, not another mistake. Because there are a lot of mistakes we do as traders. So on each mistake, if you don't go through the journey of accepting it, you will repeat it. You are bound to repeat it. So to avoid that experience, you need to embrace the loss and let it teach you, because it is a teacher. Losses are, for me, teachers, because it's always us. It's always on us. It's not the market's fault. It's always our fault. Even if the market, like price action, was very, very hard to read, still you have to adapt and get out quickly.
Yeah.
Not like still keep in it or stay in it. I mean. So yeah, that's one of the fundamentals of trading.
Okay, and I know that most people focus, on dealing with losses, but managing wins are equally important, right? As traders, how do you deal with significant wins and ensure that they don't affect your judgment or lead to overconfidence?
I think whatever that Asado shared just now, it applies to your winnings as well.
Yeah.
When you lose, you sometimes you get sad, especially when you just get started. right? And you get exceptionally happy when you have wins, even if it's a very small
Yeah.
amount,
Yeah.
right? So this experience will, on your winnings and your losses, it's gonna, you have to try to balance it, right? Of course, it takes experience, it takes time. Usually when I always deal with things by facing whatever fears or anxiety that I know head on, because I know that even if I were to avoid that anxiety, it's gonna be there forever and ever, right? So and also I know if overconfidence can be an issue, I will face that as well. Yeah, so that's how I try to maintain a balance between being too fearful and also overconfidence, right? Even if there's a very big win, I just treat it as just another number.
Yep.
Yeah, so I usually see things in percentage points
Yeah, it helps.
or basis points. Yeah, so that figure doesn't go way too big. If let's say 1% equals to $10,000 for you, right? But if you look at the percentage point, it's just one.
Yeah.
Yep. Yeah, psychologically, it affects,
yeah,
of course.
yeah.
So let me say one more thing about why it's important to deal with losses, because if you deal with them properly, as I mentioned, you will get better as a trader, or else you be stuck wherever you are on your journey. So you have to really make your mistakes your teachers. So that's the only way forward, or else you'll get stuck there, and you eventually give up, like most of traders do.
Yeah.
And that's the sad part of this industry. Yeah.
And I've also heard that fear of missing out can significantly impact trading decisions as
Yes.
well, which I'm actually very curious about. How does it affect traders, and how do you overcome it?
Yeah. Yeah. FOMO.
Yeah.
Okay.
You go
FOMO.
first.
Yeah, I go first. So each person, as I said before, is built differently. So the way I handle it, because I believe everyone has this feeling. The way I handle it is by scaling in. You know, if I see a setup or potential setup that's gonna form or is forming, whether it's long setup or short setup, so I start scaling in. It means I start with very small size. If I'm gonna, let's say, enter, let's say, 1,000 shares, okay, on this stock, I enter with 100 shares or 50 shares, just to have the feel,
Something, yeah.
you know.
Yeah.
So I'm in it. It's not. I'm not missing out anymore.
I'm a part of it.
I'm
yeah.
not missing out anymore.
Yeah.
So yeah, that helps me a lot. So when I get the confirmation, okay, and of course you're not gonna go in very far from your target. You know, if you're, let's say, okay, if you want to enter ideally on $10, when the price reaches to $10, you enter the trade. That's the ideal price for you. So you wait maybe to 9 at least, 9.5. Around that, you start entering the small size. It's not like you're gonna enter at 6, wait for the price to go to
Yeah.
10. There's a minimum you have to do. The discipline, you have to put the discipline. But when it reaches, when the price gets close to your target, that's when you feel the FOMO. Or maybe it reverses now. Maybe it reverses now. So I need to go short now. That's how I deal with it. I enter a very small position. When I get the confirmation, reversal bar and everything, I go full size, my initial full size, and that's how I deal with it for years. It's been years.
Interesting.
Yeah.
Interesting. So do you guys be at the phone when you guys have FOMO, or like, by the browser, just refresh? Did the price go higher?
Well, you'll be on the. It depends how are you trading? If short term or long term.
Yeah, true.
If short term, you're gonna be in front of the screen. You're seeing tick by tick what's happening. Long term is a completely different story. Yeah.
Okay. And June, how do you deal with FOMO?
I think it depends on your trading plan. So FOMO can be fear of missing out by missing the trade. It can also be fear of missing out by holding on to your trades for too long. So, for instance, like just now you asked me, how do you deal with your winnings, right?
Yeah.
FOMO, some people, they will hold their trades forever and ever and ever and wait for the highest point. Who knows where's the highest point,
That's
Exactly.
true.
right?
Yeah.
So if you are fearful, then take some money off the table
Exactly. Scale out.
along the way. Yeah.
You scale out.
Yeah. If you are winning, then you can take money out.
Yeah.
If whatever that you buy is slowly going up, you can use this method. Officially, this kind of way, it's called scaling up. But there's also this method called the Wyckoff method. It has been around for a very long time. In fact, like there's this 5 most important person in Wall Street. Of course, we know Dow Jones, the 5 of them. So Wyckoff is one of these 5 person. He came out with this strategy, which is to scale up when your trade is going well, right? You can use this, but for me, I analyze things in a fundamental way. Then I go into technical, and then I move on. So if fundamentally everything aligns, then I will start looking at the trades. I will start looking at the charts. If the chart is aligned as well, then I will start moving in. So it doesn't always have to be scaling in. Sometimes, as we know, there's a lot of different kinds of orders that you can do in the market. You have like market orders, limit orders, and whatever orders, there's many more. So different way of strategizing for different trades and different assets will be different for me. Yeah. And every single asset will have their own time frame. So like for instance, if I were to ask you one question, how long does it take for a 60-story building to be built?
Yeah, 1 week.
1 week? Can I hire you?
I know, right? 3 to 4 years.
3 to 4
maybe?
years?
Yeah.
Around there. It's usually 4 to 5 years. Yeah, with the technology we have right now. So you have it there. Like if you were to invest something that is related to it, you will have that timeline 4 to 5 years. Yeah. So if your trade is gonna be 4 to 5 years, you have to use a strategy that fits that
Exactly, yeah.
timeline.
Yeah.
Exactly.
You can't use something that I know a lot of people. Okay, if you go to TradingView, there's a lot of time frame. This question has been asked so many times. What time frame should I use?
Yeah, it depends on your trading
What time?
strategy. Right?
Yeah, exactly. Right.
Exactly.
So it depends on whatever you are trading.
Each time frame works. But
Yes.
it's not like this is better than that. No.
Yes.
Every one of them work, but you need to know what you're trading.
Yeah, exactly. And not all strategies will
Yeah.
work every single time.
course.
You have martingale, you have trend trading. It should fit to whatever you are trading.
Of course.
Yeah, if the market is not it's not moving and you are using trend strategies, you are gonna fail. And you're gonna if you are someone new, you're gonna doubt yourself so much to the point that you will doubt trading and investing.
Exactly.
Yeah.
Yeah. Exactly.
So using the right strategies, knowing what you are trading, what the asset is about, how long it takes for certain things to go through. If there's a policy, some policy takes a few years to go through, but some takes a few months. Yeah. So that's some of the criteria that you have to know.
Yep.
Yeah.
Yeah.
That's really interesting, and I appreciate you guys letting me crack open your trader's mind.
You are most welcome.
And I hope we gave you enough information and enough insights to actually try trading and not let these little challenges stop you from continuing your journey in trading. And that's all for today. Don't forget to like and subscribe to our channel.
I think there's a lot more we can discuss next time.